afternoon. Welcome to Midcap Radar. I am Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories that we're tracking. Midcaps trade flat even as the market edges lower. Both the Nifty and the Sensex hit session lows in afternoon trade. Financials, IT tumble, FMCG and pharma hold gains.
Oil marketing companies perk up on a sharp fall in crude rates overnight. A renewable energy pact with NTPC gives HPCL an added boost.
Business updates from Marico and Godrej Consumer Products point to early signals of a likely improvement in demand. FMCG stocks rise on Q.
Tire stocks like Fiat, Balkrishna Industries and Apollo Tyres run up on a decline in rubber and crude prices. Several tire makers have seen margin improve due to the fall in raw material prices and higher volumes. Okay, all right, those are the top headlines on Midcap Radar. Good afternoon. Well, for the markets, continues to be a down day. As we speak, Nifty is at that 17,908 mark. There has been a sharp fall in last 30 minutes at the day's low, and the mid caps, which were actually outperforming, they still are actually, but they are in the red. So a 90-point downtick on the mid cap index as well at the day's low again. Across the board, we are seeing big selling. The advanced decline ratio comfortably in the favor of declines. Bank Nifty is the biggest loser today, and across the board, something like an ICICI Bank, HDFC Bank, Reliance Industries, all these stocks are at the day's low as we speak. So Reema, of course, we have the weekly options expiry tomorrow, but we started on a decent note, but definitely did not hold on to those gains.
Absolutely. We started flat and markets were listless in the first half of the trading session, but suddenly in the last 1 hour, we've seen the selling pressure accelerate, and we were holding on to this trading range of 18,000 to 18,250, and that has been decisively broken now. We are at that 17,900 mark, which is where the 100-day moving average on the Nifty is positioned. 17,898 is where the 100-day moving average is. As you pointed out, it's the weekly options expiry, so the last 2 hours are going to be very crucial. And just quickly pull up the contribution plate, and you would see it's heavyweights like a Bajaj Finance, ICICI, Infosys, HDFC Bank. These are stocks where we've seen the biggest drag. ICICI Bank right now is the top contributor to the Nifty fall. Because of ICICI Bank, the Nifty's lost close to about 35 odd points. That said, the mid-cap index has also lost its way, but there are a couple of pockets of strength. For instance, you're seeing strength in some of these paper stocks, managing to hold up in the green. Balkrishna, West Coast, Orient Paper, TNPL. Now, Balkrishna is also under pressure, but Shalimar Paints is another one. We've seen the decline in crude prices, and that's resulted in big moves seen and big gains for Shalimar Paints. But let's talk about more mid-caps and small caps. This is Mid-Cap Movers. Vivek is here.
Well, thank you so much. So the sell-off, really accelerating in the last couple of minutes. But despite that, a couple of stocks today that have managed to hit fresh highs. Anand Rathi Wealth, after quite a while, this particular stock has hit a fresh 52-week high in today's trading session. Sundaram Fasteners today on very strong volumes, hitting a lifetime high. And Vadilal Industries continues its up move today, up almost 7% on strong volumes towards a fresh 52-week high. Some of the other names that we're attacking today, especially in the auto-ang space, we're seeing quite a bit of up move. So TVS Srishakka as well as JBM Auto continues the move from today. Company is expected to get some strong order wins as far as the e-buses tender is concerned. Some of the other names that we're tracking, Axis today at a fresh hitting its upper circuit. Landmark, the recent listing, as well as XRO Tiles continue their move upwards. On the other hand, some of the stocks today that are losing, the entire Kalyani group stocks today are hitting the lower circuits, some of them in fact, on the back of the planned delisting that actually failed, and that particular news has driven a lot of these stocks lower. IRB Infra, after the stock split, is seeing a bit of profit booking in today's trading session.
Okay, all right, Vivek, thank you so much for that. But yes, market continues to extend losses. So on that note, let's welcome Dharmesh Shah, Assistant VP ICICI Securities, for a technical check on the market. Dharmesh, good afternoon. Thank you so much for joining us. Well, it's a decisive downtick that we are seeing for now at least, and markets are at the day's low, and mid-cap index, which was outperforming in the green, so to say, is also at the day's low. What are the charts suggesting? Is there more weakness that we can see here?
Yeah. Good afternoon, Sunal. Yes, definitely. I think so. The market seems to be under more of a profit booking right now. But what we feel is that the strong support in the range of 17,700 to 800. We believe, I think so, market maybe today the pressure is more on the back of the weekly expiry, but overall we feel, I think so, more of a consolidation going forward for the market, where we believe the lower end of the channel support at around 17,700 and the higher side 18,300, 400 likely to see as a resistance. So not much negative on the market as well as not much positive. So more of a consolidation, I would say, is likely to pan out for the next week, where current levels, again, I would say that the risk reward seems to be more favorable. So buy the dip should be the strategy, where around 17,700, 800 Nifty will see a support, and we will see a pullback rally from those levels towards 18,300 to 400 levels. So I think so the buy the dip should be the strategy right now. And as far as mid cap is concerned, if you look at the last week, we have seen a sharp rally in the mid caps. What we see currently is a more of a retracement of that rally. So we believe, I think so, good quality mid cap stocks should be one right now focus on the buying side, I would say.
Can you talk about some of these good quality mid caps which should be on one's buying list?
Yes, so we have two picks in the mid caps. One is Tata Communication on the telecom space, where we believe, I think so, the stock seems to be have generated a flag formation breakout, and that too generated with a strong volume. So we believe, and if you look at the chart, multiple times the stock has taken a support at 10 weeks moving average. So we believe, I think so, the current levels of Tata Communication clearly showing the resilience compared to the market fall in last few weeks. We feel the stock should be heading towards the 1535, keeping a stop loss of 1210 for Tata Communications. Second stocks which we like is the on the capital goods space is the KC International. If you look at the mid cap infra index, has generated a multi-year consolidation breakout with hitting a new high. We believe, I think so, the infra space, inside the infra space, power space is one where KC International is something player in the EPC player. We believe the stock has seen a more of a triangular formation breakout of last 2 years with strong volumes. So we believe for KC International, the stock likely to see it's a yearly technical peak for 2023, where we believe the stock likely to head towards 598, more of a 123.6% external retracement of the entire decline of CY22. So feel, I think so, KC International as well as Tata Communication remains to be our top pick inside this mid-cap space.
Okay, Dharmesh, thank you so much for joining us. So that's the outlook as far as technicals of the market is concerned. Let's slip into a break. Up next, we'll be joined by S. Bharatan, who's the Director Refineries at HPCL, to discuss the renewable energy partnership with NTPC, but most importantly, the impact of green hydrogen on the refining space. Welcome back. As promised, we have the management of HPCL with us now. The stock is in focus, and of course, we've been talking about this big green hydrogen push as well. The crude price is becoming lower, of course, also positive for the company. The stock has come off from the highs as well. To discuss what is this opportunity for refiners in general and for HPCL as well, we have with us Mr. S. Bharatan, who is the Director at Refineries at HPCL, joining us now. Sir, good afternoon. Thank you so much for joining us. Well, a lot is happening in the energy space, and a lot is happening particularly for refiners as well. So let me begin by asking you about this big green hydrogen opportunity that everyone's talking about. Since refiners are consumers of hydrogen per se for their processes, how big of an impact it would be if green hydrogen actually comes into use? If the costs are cut to say $1 to $2 per kg, what kind of cost savings will the industry see, and particularly for HPCL as well?
Yeah, good afternoon, and thank you for taking me today for this particular discussion on this green hydrogen. Specifically for refineries, who are the major consumers of hydrogen, this green hydrogen mission will be helpful for decarbonization measure. It will be a very good measure to reduce our carbon dioxide emission. And with respect to cost savings, it will be more or less same like what we have been spending today. And the major advantage comes with respect to reducing the emission level.
So the price of grey hydrogen is the same as green hydrogen? There is no cost advantage?
Today, the price of grey hydrogen is about 1/3 of the green hydrogen as existing.
Okay.
But the policy announced will ensure that the prices come at par with grey hydrogen.
Okay, so yes, if the prices actually come down, then there will be an impact. But right now, it's grey hydrogen which is more efficient in terms of usage for refineries. So tell me something, is producing green hydrogen something that HPCL will look at? You recently actually got into an agreement with NTPC as well, where you are looking at renewables. Will green hydrogen be somewhere where you'll put capex?
Definitely, green hydrogen is going to be one of the future focus areas for us. As a first step, we have already invested in an electrolyzer as a pilot project in our Visakhapatnam refinery, which is incidentally the first amongst Indian refineries where we are installing such an electrolyzer. So, and going forward, we look for whatever business opportunities are there, we will be exploring them.
And how long do you think you will understand whether the pilot project is working and you would take a decision on investment? What's
this
the time?
pilot project will be pilot project will be commissioned in next 3-4 months. Then within 6 months or so, we will be finalizing our plans.
So by the end of this calendar year, the company would have firmed up its green hydrogen manufacturing plans and the investment. Do you have a ballpark investment in mind, sir?
Right now, no, because the numbers are changing a lot. We will have to wait and see, but we will have to get into more details on this.
Okay. So if we talk more practically here, we are talking about a shift from grey hydrogen to green hydrogen. Right now, we are talking about capex plans that companies have taken, but there is still no meaningful production that we are seeing here. According to the industry standards as well, how long do you think it will be a reality before green hydrogen is actually used by refineries like yourself?
As I told, our pilot project will be commissioned within next 3 months. So that is the first step we are going to keep. And subsequently, within the next 2 to 3 years, definitely we will be able to scale up. And depending on the details of that policy guidelines which have been issued, we will see that it is quite accelerated. Next 3 to 4 years, this should be a reality.
Could you give us a sense, sir, just moving on to business then, what are the current refining margins? We know Singapore GRMs were at a record high last year, same time in January of 2021. Since then, they have been on a declining trend. Where does it currently stand at, and what do you think the next 3 months the numbers could look like?
After touching a peak, it has been steadily reducing. So the Singapore's cracking margins are somewhere around 8 to 8.5 dollars per barrel now, but that is on a reducing trend. In the coming months, we expect it will further go down before picking up in a couple of years from now.
Okay. And why do you think so that will go down? Are more supplies coming in the global market? Are players adding more capacities? And with whatever is happening in China, do you think that is something which will have an impact on refining margins as well?
Yeah, this is the period where new capacities are coming, 22, 23 and 24. And the demand has same time has reduced. So that is why the prices are downward.
So just talking about retail demand, now that everyone's transitioning to electric vehicles, do you think the demand for auto fuels is going to come down?
In India, the overall energy requirement is exponentially going up. So the renewables will take a part of it. At the same time, the fossil fuel based also will be increasing in this immediate future.
Okay. All right. So that is about what's happening. But sir, where are the cracks currently? When you spoke about Singapore GRMs being around $8 to $8.5 a barrel, they are on a declining trend. But generally between different products, we were seeing that diesel losses continued while petrol did better. Of course, that's not on the refining side. But generally, what is the sense? Is demand improving here, and so the cracks will also go higher?
Right now, the cracks are actually coming down. Diesel crack from a peak of 50, around 50, it is now close to 30. And gasoline actually reduced a lot. It is a bit improving. So matching with the refining margin, the cracks may more or less remain at this level now.
Okay. You said demand is strong. What are the current refinery utilizations for you?
For HPCL, it is 105%. And typically in Indian industry, it is close to 100.
Okay. So 105% for HPCL, higher than what the industry is doing. So last question before we let you go, we wanted to understand, because the next big kicker that will come in for HPCL in general is the Vizag refinery expansion, and also the expansion that is happening at Rajasthan refinery. Both of them, what are the capacities, and when will they start contributing in terms of throughputs in the P&L?
For Vizag refinery, we are expanding from 8.3 million metric ton to 15 million metric ton, which is in the advanced stage of commissioning. All utilities have been commissioned. By end of this financial year, the production will start from there. Regarding Rajasthan refinery, which will be expected to mechanically be completed by Q4 of 23-24.
Okay.
There we are putting up a 9 million metric ton refinery.
So initial capacity utilizations or the throughput which is expected here then in both the expanded capacities?
both Vizag may straight away go into about 90-95%, and Rajasthan also we expect it will be starting with 90-95% straight away.
That is the capex that you're talking about. No further capex that you plan on the refining side. Once these come, you will pause on capex in the refining segment?
That is a part of our strategic plans. Nothing has been finalized, but as an overall strategy, we'll be deciding on that.
Okay. All right, Mr. Bharathan. It was a pleasure speaking with you. Thank you so much for joining us and explaining to us what the impact of this green hydrogen move be. But let's do one thing. We'll slip into a short break. Up next, we have a special segment, Mid-Cap Spotlight. We'll be focusing on BF investments. Stay tuned.
Welcome back. For now, it's holding on to 17,900, but we've seen a big crack in the markets, down 127 points on the Nifty. This is over and above the near 200-point fall that we had in yesterday's session. The Sensex 2 is now down close to 530 points. Sipla, by the way, has suddenly seen a bit of a spike. It's gained close to about 2%. But let's get to our segment, Mid-Cap Spotlight. Mangalam is focusing on BF investments today, the stock that saw a near 60% bump up just this week. Mangalam is now here to explain the 10% drop that we're seeing today. Mangalam.
Well, if you just take a look at the way the stock has moved, you know, on Monday when we started out the first day of 2023 for trading, we saw the stock locked in upper circuit. Thereafter, on December 2nd, there was another 20% upper circuit. And yesterday, because the circuit filter was revised, we saw a gain of almost 10%. So 3 consecutive upper circuits is what we saw. If you compare it to Friday's close, the stock actually, had seen a rally of 58% ahead of yesterday's important board meeting that the company had. What was the board meeting all about? The board meeting was about considering voluntary delisting of the company. Now, here's why the stock is down 10% today, because the outcome of the board meeting, which was reported to the exchanges just before midnight, was that the delisting proposal was not approved by the board. And that is something that has the street disappointed. Now, the reason for not approving the delisting as given by the company was that one of the promoter group entities sold 400 shares of the company in the open market on June 29, 2022. And regulations required that no promoter entity should have sold or bought stake in the company 6 months before public announcement of a delisting. So as a result of which, the board considered that they should, disapprove this delisting proposal that they have. But the big questions still remain. One, why wasn't this discovered before the proposal made to the board or before, they went public with the decision of taking the proposal of delisting to the board? And secondly, now that we know the reason and 6 months later, will delisting be considered once again is something that everyone will keep an eye out on.
Thank you very much for that. Out of time on Mid-Cap Radar. Thank you for watching Mutual Fund Corner when we return.